Hey there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. In this episode, I'm joined by guest co-host Alejandro Gutierrez. Full of charisma and enthusiasm for building borderless blockchain communities, and also a top blockchain leader inside and outside of Ireland, Alejandro is the CEO of npayme Labs and one of the co-founders of ETH Dublin. To kick things off, Alejandro gives us a quick look into npayme Labs. He shares a snippet on his recent trip to Token 2049 in Dubai, and also a preview of ETH Dublin 2024. I also shared some details on the Techstars Web3 Demo Day coming up in New York City as part of New York Tech Week from June 3rd to the 6th. You'll find links to register in the show notes for this episode on moneyneversleeps.ie. We then talk through the still challenging venture capital funding market, even with the flurry of early-stage Web3 funding deals announced so far this year. As we recorded this episode a few hours before the SEC took the first step in the approval of Ethereum ETFs, we unpacked what happened in the week of May 20th that led to this completely unexpected outcome and political 180. We also stepped through the political and legislative climate towards crypto in the US, and how things like the overturning of SAB 121 and the passage of the FIT21 Act, at least through the House, are driving real change. All right here on Money Never Sleeps. Alejandro Gutierrez, how are you doing, my man?
I'm really glad to be here. Again, I always enjoyed podcasts and your company, so it's fantastic to be back after a few months.
I know, it's been a little while. And during one of those months, actually in the last month, you were at Token 2049 down in Dubai in the middle of a tsunami, weren't you?
Indeed, I was in there. And to be more precise, we were on a yacht on the middle of the storm. That was probably the best place to be at, but it was wild, I can tell you.
You were on a yacht in the middle of the storm?
Yeah, and because we npayme, we have the fantastic idea of actually just hosting a yacht party, as sometimes you do in Dubai, taking consideration the great weather, while trying to compete as well with another 300 side events that were part of Token 2049. Yeah, we were unlucky or lucky. I don't know, depends on how you see it, because we have a captive audience for like 5 or 6 hours of fantastic people. So definitely we were expecting more, but the people that were there were with us for 6 hours probably, and built great relationships and people that we're working with at the moment. So that's fantastic.
Wow. No, that's brilliant. That's brilliant. It's such a huge conference. I know a number of founders from Techstars Web3 went down there, and it seemed like just from the stories that came back, even with the big storms and people pushing water out of the way, out of their own hotel rooms and Airbnbs, whatever, that it was well worth the time. I know I think it was Owen O'Driscoll. Shout out to Owen from True. He was headed down there on a last minute flight or something like that. And I didn't hear from him afterwards if he got there and then made it back.
No, he did not. I was chatting to him, and then at probably 4 a.m, say flights are canceled and he couldn't make it, unfortunately. Victor Lee, he got stranded for like 2 or 3 days in Oman.
Really?
Yeah, because there were no flights coming in or out. So the poor man was over there, stranded for a few days in the airport.
Wow. Poor Victor. No, I spoke to him after that. Shout out to Victor Lee from ThirdFi. He's got this incredible new tokenomics model that he's working on that's really interesting, that I would love to see the light of day. So we'll see what he ends up doing there. But no, Victor's a good guy. Too bad he got stuck in Oman.
Yeah. Fine enough. I was with him actually last week discussing about this new structure for tokenomics, and it's really interesting. I think there is something there for sure.
Oh yeah, I've told a couple people about it, and they got excited. And in a nutshell, it's basically the anti-dump provision that you put into the smart contract around the token issuance, and the vesting, which would be pretty cool to see. But pretty technical, but very exciting at the same time. But listen, you have ETH Dublin coming up. And as I mentioned before we hit record as well, I'm unfortunately going to be on my way to the USA for Demo Day for Techstars Web3. Hopefully I might be able to stop by on Saturday, but I will miss the big day on Sunday, the conclusion. But tell us what's going on at ETH Dublin.
Oh, no, it's fantastic. Super pumped and ready. This year, this is the second edition. This year, we were trying to just make it a little bit more international and attracting speakers from abroad. So around 15 speakers coming from outside Ireland, which is great because it allowed the ecosystem to have contact with these people that usually, especially smaller companies like SMEs or projects, new projects, they don't have the chance to just interact with the caliber of people that are coming. So I have CEO of Aragon is coming. We have the CEO of Super Rare. We have Lawrence Day is coming as well. Dr. Nick Almond. People from Light of Finance, DarkFi, Keep Content. So it would be fantastic. We want to use these to keep growing and growing. And also, we now are one of the official ETH events.
Awesome.
So we got the sponsor by Ethereum Foundation. So which is great, right? Just to see how quickly this is moving and how we can just help the Irish ecosystem to keep growing.
Absolutely. No, it's great to get that recognition and that seal of approval from Ethereum globally with ETH Dublin. Yeah. And that is an awesome lineup of folks that are coming over to attend and to participate in this. And I've talked to a few folks as well that are notable in terms of their investment businesses that are like, Pete, should I come over for this? I'm like, absolutely. Absolutely come over for this. You'll love it. So there's exciting times ahead in the next, well, when this hits the wires, it will be only a few days away, but best of luck in delivering that, Alejandro. I know you've been a huge champion of this and driving it forward. So well done to get it to this stage.
Thank you very much, Pete. And look, this has been a huge team effort. Like it's been a lot of people working behind these, and the co-founders, Kalen and Brian, big shout out to them because they have put a lot of work on it. So it's good to see actually ecosystem getting together for this type of initiatives, and we need more. We definitely need more because the potential of Irish builders is crazy.
Mm-hmm. It's amazing, and I know it's only going to go upwards from here. Since you were last on the show, Alejandro, npayme is something that you're now full-fledged into, isn't it?
That's correct. Yeah, I started the project at the beginning of the year. And it has been really interesting. It's a big shift for me because, as you know, I was deeply into the whole tokenization of real-world assets, and I'm fairly DeFi, but with a more traditional flavor. And coming into a project that is more looking into content creation, gaming, metaverses, and creating that composable layer, right? That is allowing to get these disparate worlds together through monetization strategies, to promotion strategies, through loyalty programs is really interesting. It clearly has expanded my mind on what the Web3 ecosystem can do, and also on where potentially the real adoption for the next billion users is going to be.
Okay.
I think that social media is probably where it's at. And now I can clearly see that all that industry probably is going to be one of the first ones to have full adoption into what we're doing.
Yeah, I was thinking about this parallelly, deeply on my walk this morning about putting my own investment thesis into an even more consumable nutshell in preparation and thinking about Techstars Web3 Demo Day coming up in New York City on June 6th. And it's three very simple points. One, infrastructure. We need more. We need this to be, and this is to quote Jesse Phillips from Trustware. Shout out to Jesse. I'm doing tons of shout outs today so far. But the usability, the security, and the accessibility all need to improve in crypto, in Web3. And those who are building infrastructure are focused on generally one of those three things: usability, security, or accessibility. The second part of it is tokenization. This is a huge opportunity across not only financial markets, but into the financialization of everything. The third is consumerization. And I think that's where you're playing, is that enabling the wider society to enjoy the benefits of this technology. And I think that's where you're playing now with npayme is, and Farcaster, Warpcast just raised $150 million.
Correct, so they just did.
That is a huge social media play or a social network play. Yeah. And I talked about that in depth with Laura Walsh a few episodes ago. And I think you're on the right track. And this, if you're looking for widespread adoption, you need to put it in the shape of something that people are used to.
Correct. Like, as I think always been vocal about the fact that people are used to certain ways to transact and to engage with Web2 applications. And in a way, and they're actually from the UI UX, you see what Web2 has done is fantastic. I think it is great, and we should learn more out of how people are engaged and what these big projects have done. Okay, UI UX for TikTok, for Facebook, for Instagram, for all the big apps is great. And that's the reason why people are still using it and they still people engage and they have still big growth. So I think from our side in Web3, we need to just learn from that and to say, okay, how are we going to just make it easier for people? I saw a video, a really interesting, really funny video on X a couple of days ago, and it was showing this game, say, if gaming in Web3. So basically, was that people were, it was like like a shooting game, and basically every single time that the person was going to collect something, there was the MetaMask prompt coming and signing. It was hilarious, right? But in a way, it's reality.
It is. I know. And we do need UX to go up and to the right big time in Web3, by all means.
We do.
And we're going to talk about this a little bit later on when we talk about Uniswap as well. But big opportunity here for a lot of good things to happen to enable the rest of the world beyond, like you said, the 9.6 million. I've looked at numbers like 17 million, 8 million, 20 million in terms of the actual daily active users of this technology today. And even though there's close to 1 billion crypto addresses around the world and people point to that, it's like, who's using this daily? Who's using this like people use Facebook daily, where they have 2 billion daily active users? Okay. Yeah. So we have a ways to go, but that's where there's such a huge opportunity, and why I'm in this space and funding this space and working with founders in this space. And on that note, you pointed out something that you saw coming in from DL News, which was Galaxy Ventures, were bemoaning the challenging market as crypto VC funding is set for a measly 27% gain. I'm more optimistic than that. I think there's more coming. What did you think about Galaxy's claim there?
Look, I'm optimistic as well. After Token 2049, I think it changed my perception. Clearly, I think the expectation was that investment rates were going to be back at the levels of 2021, 22. And what I'm seeing is the sentiment on VCs is not there yet. I think the macro is still playing a big part of it. And when you see the macro, there's a lot of uncertainty happening at the moment. In America, you have wars, and all these actually plays a massive effect on how the investors are seeing and where they're going to be allocating the funds, right? But I'm optimistic. I think funds will come. I think probably, and we're seeing this like at the moment we're at fundraising, and we're seeing that there are trends that are moving pretty quickly in the market. So, for example, investors they're only interested in tokens. And then you speak to them a month after and they say, actually, right now we're interested in tokens and equity. Mm-hmm. And these trends starting changing depending actually on how the market conditions are. So for projects needs to be really nimble. I need to be just ready for whatever is coming out of the market.
Oh yeah, that's what I'm seeing as well, is that all the VCs want a safe, simple agreement for future equity with token warrants. So that is to say, if the VC writes a check for $500K for equity on the safe, then they also would get $500K worth of tokens when they're issued. And if they're issued, which is the big thing. So sometimes that's done as a 2-to-1 ratio, where it's for if you invest $500K cash that you'll be issued $250K worth of tokens, a bit less. And there's all different types of cap table implications for that for founders to think about. Not only in terms of how much equity they're giving up, but also how much of their token supply that they're making available for VCs. So tons of things to think about here, and it is not an easy minefield to navigate. But that's what they're looking for, because what will happen is that if they do issue the token and you've written a check for $500K in equity as an investor, and when that token is issued, you have $500K coming to you, whether that 3Xs or 7Xs or whatever within the first day or two. With vesting, you're not going to be able to dump all of it, but you'll be able to dump a good chunk of that and likely be able to get your money back based upon what you can dump.
that's the play, right? And I think that VCs have learned the lesson on seeing how many companies are extremely profitable, of projects that are extremely profitable, right? And the equity side is doing extremely well, but the token is completely irrelevant to the use.
Mm-hmm. Yep.
Right? So that there's no real utility. And that's the reason why we're seeing more and more VCs interested in that equity.
Yep. And I kind of look at it in the way that I invest through Techstars is that we take equity and we also take tokens and the justification is that we don't know where the enterprise value will accrue to in the long term. We don't know whether it's going to be equity. We don't know whether it's going to be the token that will capture the value because we invest so early. So I'm in this for the long term. So I'm not thinking about dumping. But what I do have to think about as an investor is that once that token does go live, that you're not just managing a portfolio of private, unlisted assets. You're managing a portfolio of public liquid assets. And that's a different kettle of fish for a VC to think about. Every day, looking at the ups and downs, having the platform in place to be able to do that, and to be able to make trading decisions on that, to have market makers involved. You don't want to move the price that much by bleeding out some cells into the market if you think that's the right thing to do. So it's a different skill set to think about as a VC investor in having that type of support on board to be able to manage that for you when these tokens go live. So back to the point of the story, I think there's, like I said, I'm optimistic. If you look at some of the numbers that the story is playing around with, is that venture capital investments into crypto projects are expected to reach 12 billion in 2024, which is only a 27% increase from the 9.4 billion raised last year, even as Bitcoin soared to a new record. But like you said, the macro situation between now and 2020, 2021 is completely different. I mean, people are just signing off on investments to crypto projects like I don't know what. And that because there was so much capital out there, so much dry powder, low interest rates, the COVID stimulus, everything that was happening. So it's completely unrealistic. And I'd love to see if you could do an estimate of the irrational investments that took place in crypto between 2020 and 2021 by VCs into these projects, and you scraped all that away, say it was 75% of it. How do we actually adjust that down and say, well, if we took the sensible projects that were done, I'm sure some analysts could do this for us, right? You look at the sensible projects that were done back in that time period of 2020, 21, and you clawed away all the rest. Let's look at where we are right now, because what's just come into the crypto markets in terms of the ETF side of things, there's now 76.86 billion in total market cap in Bitcoin ETFs, right? So
that's which is insane, right? Like I would never thought about that. Remember, I think last episode we were just chatting about the ETFs, and now seeing the volumes, I'm really impressed, to be honest. I wasn't expecting that it was going to be ramped up as quickly as it was going to happen, because if you see what happened with the ETFs for gold, actually it took a little bit of time for them to actually ramp up. Seeing this with the FIT21 is pretty impressive. I fully agree with you. I believe the expectation was really unrealistic on 2020. The amount of liquidity that was in the market at that point was crazy. I remember just having chats with VCs, and they were just putting 300, 500,000 without even checking decks.
Yep.
They didn't care. It's like, who is behind this? Okay, 500 grand. And I was like, oh, wow, this is wild. Especially coming from a traditional where you're trying to just fundraise and they want to know absolutely everything that is happening. It was completely unrealistic.
Yep, it totally was. And I'm looking at CryptoRank, which shows the projects that have been funded so far this year. And I've got it filtered, and I'll put this in the show notes. I got it filtered so that we're just looking at the early stage projects. I've got about, I think 50 per page on the page I'm looking at. And there's 5 different views of that. So at least 200, 250 early stage projects in crypto have been funded already this year, which is obviously more than one a day. Maybe even looking at it 2 a day if you're just thinking about business days. So we are, I don't know what the pace was last year, but back when Bitcoin was down at 16,000 a year and a bit ago, that you weren't having this kind of funding going on. So
at all. It was even difficult getting meetings with VCs at that point.
Mm-hmm.
They were not even taking meetings. They were not interested in anything at the point. But remember this piece as well. There has been a huge amount of controversy in the space. What happened with FTX and all the uncertainty, for example, with Binance. And that actually takes a toll in the confidence for VCs to put money in the space, right? Plus, everything that happened on the regulatory side in America, VCs trying to just figure out where was the jurisdiction that they want to actually put money on. So it was a chaotic, time last year, like 18 months for the space.
Absolutely. And it, I'm just looking at the funding market now for these companies that are coming out of the Techstars Web3 program. Will be landing into the market in June, and 3 have started raising already, and the 4th one will likely open up again in June as well. But I'm expecting them to be well received by the market. So we're at a good place. I do have I am pushing them and saying, who knows what's going to happen with the market? And that when Bitcoin is up around 65 to 75,000, or even that 58 to 68,000, we're still in a good place, but you never know how long that is going to last. And that has been the bellwether of a lot of different things in funding crypto projects. So, but we may have another big push here about to happen with the Ethereum ETFs, the ETH ETFs. Everyone was expecting that not to happen. So we are recording this on the morning of the 23rd of May, and that I'm going to push this out next week, and that I will go back and I will add something in afterwards if this is actually approved today. But the Van Eck ETF for Ethereum, for ETH, was listed on the DTCC. So that means that it's the kind of the market infrastructure that you need in order for these things to physically trade in the US, that those settings are being turned on or have been turned on yesterday.
Oh, wow.
And could be expected to start trading as early as next week. But I am nowhere near as bullish about this one than I was about the Bitcoin ETF, just because of that there wasn't enough of a push on the SEC to let these things go through, as there was with Bitcoin, because we had the Grayscale story coming out of December, January, where there was a case against the SEC where they were being ruled as arbitrary and capricious in their decision not to allow the Grayscale Bitcoin Trust to convert into an ETF. So we don't have that kind of political impetus and that flagrant violation, as they call it in basketball, to really push things along. But
Pete, don't you reckon, I have a question here for you. Don't you reckon that all that political push actually happened in the background because the government didn't want to just expose themselves again to this?
Yeah, but there's so many things at play right now. I mean, there's the election coming up between Trump and Biden. There's Gary Gensler's ambitions to become U.S. Treasury Secretary. There is how will all these decisions be perceived by those that may or may not be in power when it comes to Gensler trying to get that kind of seat. If Trump is elected, there's no way in hell that he's going to become Secretary of Treasury. If Biden gets reelected, maybe he will. You bring in someone new to run the SEC, and then Gensler gets Treasury. Who knows if that's going to happen? That's what Gensler wants. But all these different things that are going on, there's so much political meandering that's happening here.
Yeah. And that happened like in the last 2 weeks, right? Suddenly when there was that massive push from the crypto vote, and some of the parties, the Democrats that had been pushing the anti-crypto agenda, realizing, okay, we might be in trouble here if we don't pay attention to what these potential electors are going to be saying. And that big push in X for the last 2 weeks has been extremely harsh, right?
Yeah.
Saying people just going like, doesn't matter if you are blue or red, like we need to get together because if not, the whole industry is in jeopardy. And I think politicians seeing that push and probably they're starting taking some act on it, right?
Yeah, I know. And it seems that the anti-crypto, Biden's stance here with, what's her name? Elizabeth Warren, yeah. That the two of them together, and it's become a political thing. And it shouldn't be a political thing. It is now, but, I don't know. That's not changing anytime soon. And so what Trump's doing is he's seeing that Biden is pushing back against it. So in a political move, that Trump is saying, hey, I'm the crypto guy. And so vote for me, because I think someone did a poll recently, I heard it on a Bankless podcast this morning, that 20% of Americans now see crypto as being a political issue and something that may impact their political decision making. I'm like, impact their vote. So I'm like, it's amazing that it's come this far. But I also heard someone say that you get Trump too excited about, if Trump gets excited about some political issue and maybe doing something volatile, that all you need to do is go in to say, oh, Mr. Trump, it's great to see you. You're looking very handsome today. Can we talk about this thing later and maybe not do that? And he would change his mind. Right? All you need to do is tell him he's handsome, and he'll forget everything else that's going on in front of him and magically just, hey, all right, listen, I'm calm, cool, and collected again.
Feed a little bit his ego, and
yes,
that will work the magic, right?
Absolutely.
You know something? It's pretty interesting because he is extremely savvy at capitalizing from these scenarios. He knows what he's doing. There were news yesterday, reporter about him opening the first crypto donation.
Yes.
So that tells you the guy is clearly capitalizing on it.
Oh, totally. And you know that there'll be some crypto whales that are responding to the memification of a vote and
big time,
saying, yes, here you go. Take 1,000 Bitcoin off of me, please.
Yeah.
There you go. Contribute to the Trump campaign. That makes me sick, but it will happen. It will happen. But again, actually, like from a technology perspective, and this is something that have been, because with npayme we're actually working on like promote helps donations, right? And you can donate to initiatives and promote those initiatives. And there was something really interesting that I realized. One, that crypto donations tend to be 20% higher than the fiat donations. Okay.
Which is crazy.
Yeah.
It tells you a lot. But the second one is, especially in political campaign donations, like you have a layer like blockchain, you're going to be actually have proper traceability of where the funds are coming from and what is happening with those funds and where they're going. And that can be a game changer, right?
Totally.
In the whole political donation space.
Chainalysis all over this.
All over this. That's it.
I mean, they already have governments as customers, as technically enterprise customers that are using Chainalysis for a whole bunch of different purposes to be able to track where crypto is coming from and where it's going and where it has been. And they can now do this to a huge extent in tracking campaign donations to see who's getting what from whom. I'm sure that the Stormy Daniels case, it would be far easier to track what happened if Michael Cohen had been allegedly instructed to pay Stormy Daniels in crypto. Then it'd be far easier to prove what happened than what's happening now through looking at the normal bank account channels. So,
correct.
Yeah, he's made his bed. He's now going to lie in it, which is laden with. I don't even want to think about the image there, but anyway. One of the things about the ETH ETFs, this was news in CoinDesk on the 21st of May, and it's one of the major issues here that keeps coming up with the ETH ETFs is that Ethereum operates differently than Bitcoin, and that in the Ethereum ecosystem, in the Ethereum blockchain, the way the Ethereum blockchain is secured is through proof of stake rather than proof of work, which is Bitcoin. And with proof of stake, you can stake your Ether and that you can receive rewards for that. Okay. And so Fidelity, in their filing for their ETH ETF, has dropped their staking plans. And this is one of the big compelling reasons for institutions to hold Ethereum, is that you can stake that and you can receive rewards for it. And it looks like the SEC has probably pushed back on that and said, well, this is where Ethereum is challenged by regulators in the US on whether it is a security or not. Even though the CFTC has clearly come out and said it's a commodity and that that is what allows ETH to be traded in future markets and to have futures based around it, that you end up with the SEC not giving any clarity on it. Now they're going after the Ethereum Foundation and with some claims on this. But
Yeah.
Once you remove staking from the equation in terms of what an ETF participant, an ETF shareholder may receive as a benefit, that it seems to remove some barriers here. So who knows? I don't know with the Van Eck one, that could be the first one to go. I don't know if they've removed staking or not. But the Fidelity one did drop their staking plans in terms of the ETF. But I think that will come back in time. And I think some of these market infrastructure bills that are going through in the US, or hopefully going through in the US, will enable some clarity there so that this additional component of upside for ETH ETFs can actually be realized.
Yeah, I think they are playing safe. I think it's a good bet. And they're trying to just avoid every possible component from the regulatory perspective. And that's what staking brings into the table. Yeah, it has the upside, but at the same time is adding that complexity from the regulatory point of view. So I believe that at some point when there is clarity, they will come back and put it back into their offering.
Yep.
So if you ask me, I think it's a really smart move.
I'd rather have an ETH ETF without staking than no ETH ETF.
Than no ETF, exactly. And that's probably a good path, a good approach.
Absolutely. I mean, it was a shocking jump this week, up 30%.
Crazy.
And just boom, based upon this renewed or this all of a sudden optimism that the ETH ETF will be approved. There was another article in CoinDesk that was talking about, well, that will pave the way for a 60% increase. This is not investment advice in ETH, because that's exactly what happened to the Bitcoin price when the Bitcoin ETFs opened up back in January.
Yeah. So you see today at this moment, the price is $3,907. And checking here, the market is the only blue chip that has gained something today.
Okay.
2%.
Okay.
So clearly the sentiment still is strong.
It is. And with all those political impacts on what's going on here, there's even more that's happening in the US. So last week we had SAB 121 was overturned in the House in the US, in the House of Representatives. And SAB 121 was an accounting rule that was put in place by the SEC that said that banks, if they want to hold crypto, they need to hold it on their balance sheet and have it as a liability, and obviously need to post capital against that. And as opposed to holding it in custody like you would in equity or a bond. And that's been incredibly restrictive. And I think I heard on someone lamenting the fact that, hey, take a BNY Mellon. They've got a crypto custody business that they've been trying to get off the ground. And it's like, why are they not moving faster? It's like, they're not moving faster because of SAB 121. Because you can't, if you're a bank and you have a bank license, you can't, it's incredibly onerous and just unrealistic for you to hold it in custody. So last week that was overruled, and it was thrown out, SAB 121, by the House. Biden said that he would veto it. It still needs to go, obviously, in front of Biden, but we'll see what happens there. Someone commented that if you know that the president's going to veto a bill and that it won't go through, when it goes through to his desk, that allows everyone to just vote their conscience. So see how they really feel about the issues, because they don't care, because they know Biden's going to veto it anyway, rather than dealing with some political expectation. Did Biden just say that so that he could see what people really felt about the issue? Just get people to vote their conscience. So I don't know what's going to happen.
Correct.
We got this FIT21 bill that just passed through the House yesterday, that this is the market infrastructure bill for crypto that does some very nice things like Mika did it's carving DeFi out of it for now, because this is too complicated. Let's just leave it out. And there is actually part of the legislation that was voted on yesterday where it does physically say, it's actually an amendment to the Securities Exchange Act of 1934, which says a person shall not be subject to this act and the regulation thereunder based upon the person directly or indirectly engaging in any of the following activities, whether singly or in combination thereof, in relation to the operation of a blockchain system or in relation to decentralized finance. So that is a big carve out, right? To put into law, which is fantastic. I mean, and for so long we've had the SEC saying that we have rules. It's just that people in crypto are breaking them. And then we got everybody else saying, well, listen, the rules are out of date because they're from 1934.
They're not applicable at this stage, right? As I say, there's a lot of water that has gone under the bridge, and trying to just box out these disruptive technology with rules from 1934 doesn't make any sense. It doesn't fit. So I think there are a few components here, and it's going back to the conversation on how politically the space is becoming, right? Because clearly there has been a big push, and now Democrats as well trying to just push this new regulation and trying to, or they are starting seeing suddenly the benefit that being still on top of this industry will bring to the American economy. And so tons of debate about, look, if the stable coins are still ruling or just helping, right, the ecosystem and helping people to get in financial systems, well, it's dollars anyway. And this is pegged to the dollar, and this is backed by dollars, right? So we'll still be on top. And I think politicians have not seen it that way previously. And instead that they're starting seeing it now. And that will probably just open a path for regulation to move faster in America, which is great to see, right?
Yeah, we need it. We need it. The U.S. has a lot of catch up to do with the rest of the world. And you're very right, Alejandro. Once the politicians understand that, 75% of all transactions on centralized crypto exchanges involve a stablecoin, where the overwhelming majority of stablecoins are US dollar backed.
Yeah.
And this is the dollarization of commerce at the retail level, at the consumer level, the world over. I mean, we already have 80% of the world's commercial transactions take place and denominated in US dollar, but that moves at the speed of contracts that take 14 days or more to agree and 3 to 7 days to settle through the old banking systems. Getting this first FIT21 Act in place would be a huge, huge benefit to what it was Representative McHenry said on the Bankless podcast. You'll like this. He said, companies can stay in the US to innovate instead of where they're going right now. They're going to the UK, they're going to Singapore, they're going to mainland Europe. He's like, are you kidding me? Those are the places that innovation goes to die. I'm like, well, I don't feel that strongly about it, Representative McHenry, that there's plenty of good innovation going on in mainland Europe, in the UK and in Singapore.
I will have to say that after my trip to Singapore last year, at the end of the year, they're at a different level. How deeply ingrained they are, like especially in everything that has to be financial systems, is completely different.
Totally. But, I think that was a very political statement for him. And USA.
Well, but at the end of the day, somebody needs to just raise the flag. Yeah, exactly. Somebody has to raise the flag and say, hey, we need to just bring this back home, right? Because we are losing the edge, which is true because people will start leaving if there is not a proper set of or a framework put in place. We saw that in Europe, right? And as soon as MiCA happened and there was some regulatory certainty, the difference and the amount of the fast track that happened from the innovation perspective here in Europe was crazy.
Totally. I know. And MiCA is happening in Europe. That is, I'd say over the next 6 months, we're going to see a huge amount of activity there with companies applying for their MiCA license. It's going to be pretty insane. And I'd say we'll see how fast, hopefully this bill moves through the US. As I was saying before we turned on the record button, Alejandro, that there is a little bit of a difficulty with this FIT21 Act that the US House voted yesterday on Wednesday, the 22nd, to approve on the vote of 279 versus 136. And it's the Financial Innovation and Technology for the 21st Century Act, or FIT21. So it was a very strong showing from House Democrats, which was unexpected given the Democratic leanings towards anti-crypto stances. So the one little thing here is that when a bill passes through the House, before it goes to the Senate, or that even before it goes through the legislative process in the House, that a companion bill is introduced in the Senate, which is technically the upper house for those that aren't familiar with the U.S. legislature and how it works. With the FIT21 Act, there was no companion bill introduced in the Senate, which is and it's basically like a copycat bill that one of the senators sponsors and takes responsibility for. We didn't have that. This is going to the Senate naked, and that there is no companion bill. We'll see what happens there, but it's going to take a while for it to get through to the next level, is what is expected for Senate approval, and then it would need to go to Joe Biden's desk. Who knows how long that's going to be? It could be Trump's desk. Who knows what's going to happen with this election? It's really a crapshoot right now. So very positive that it passed through, especially with that Democratic leadership behind it. But we will see where it goes from here.
And I think my expectation, this is not going to move us as quickly as it happens in the House.
Mm-hmm.
And that's where all the roadblocks are going to come. However, it might be that Democrats are thinking that this is something they need to just push into Biden's desk before the end of his term. So in that case, they can just prove to all that crypto vote that they are doing something for the ecosystem.
Yep, that would be great. And I'm thinking that just even the existence of these things like SAB 121 being overturned, the FIT21 Act going through the House, that hopefully this stops some of this ridiculousness of the SEC of sending out Wells notices to the likes of Consensus, Robinhood, Uniswap, you name them.
Yeah.
And the existing actions that they have in place with centralized crypto exchanges. And that, okay, look at the legislation that is actually being proposed now and going through the political process in Congress. Mr. Gary Gensler, please stop, because there are new rules being created, because new rules are needed. So just park this other stuff, please. And one of the most ridiculous ones was with Uniswap, right? And the Wells notice issued to Uniswap, where that is a decentralized exchange. It's code-based. And when I use Uniswap, I just feel like I'm going to some file utility that is on my desktop to say, I need a token that I can't get on a centralized exchange so that I could do something on a decentralized app. And so I go to Uniswap and I get that token that I need and I bring it over back to the platform. That is not a brokerage. That is not a securities exchange, because those are much different things. And I'm like, if you guys would just use this stuff and look at it, you would clearly understand that we're in a much different territory with DeFi than we are with the securities markets.
Yeah, correct. And I think that's going back to what we're saying. It's just those obsolete laws that they don't apply here, but that they need to just, in a way, try to fit somehow with whatever they have, right? And I think he's using this for his own political will as well. As you were saying, he's running for some other bigger roles. And he's trying to please some people in the government.
Yep.
Right? That's what is happening there. Like, I still remember, right, seeing the videos of Gary Gensler in MIT talking about crypto, how crypto was going to just change completely financial systems and kind of the next evolution and how they were fairer and they were going to just help the whole humanity. And it was really interesting. And everybody in the space, when he was named, right, as a commissioner, everybody thought it was like, wow, this is going to be big, right? He's going to just help the space. He's going to just push us into a different direction. And now seeing it and how this whole saga evolved is just like, it made me think like, is this the same person?
Yep.
What game is he playing here, right?
I saw him live.
I still don't understand.
I saw him live talk about this. It was a higher education association in Ireland back in 2018. And he was over as a guest speaking on a panel and also did a little bit of his own stand-up chat. And it's exactly what he said. And I met him. I shook his hand. He was still at MIT at that point. I said, Gary, because he's not Commissioner Gensler at that point in time. I don't know what I would have called him anyway. I said, Gary, it'd be great to connect. Talk a little bit about how we might be able to collaborate on things. And he ghosted me after that. It was absolutely fine. And then to see what he's doing now, it's just completely so transparently political, which people do. That's their right.
Yeah.
So.
Well, he will pay a political price for that as well.
He will. He absolutely will. He absolutely will.
The way it works.
It is. One last question for you, Alejandro. Did you have pizza yesterday?
I didn't buy it with Bitcoin, but I had pizza.
Yes, it was pizza day. We missed that.
Yeah.
So it was on May 22nd, 2010. It was Florida resident Laszlo Hanyez. Paid 10,000 Bitcoin for 2 Papa John's pizzas.
Yeah.
Right. And it was an analysis on CoinDesk this morning that went through. He's much more indoctrinated into the history of Bitcoin itself and the technology of it than it was just him buying pizzas. He wasn't just some numpty that said, oh, I'm going to use some Bitcoin to buy some pizza. There was some rhyme and reason to this, having to do with some example of that in Satoshi's writings at one stage, comparing, hey, if someone could buy a pizza with Bitcoin and then someone could then pay for a haircut with Bitcoin, we got more and more people that are thinking about using this in everyday life. So yeah, there was something there. I didn't get any pizza.
There was yesterday a gathering that was organized by ETH Dublin and some other people, because there is the Pizza DAO. I'm not sure you're aware of this.
Pizza DAO, yeah.
So Pizza DAO, they organized a pizza day across the world and they pay for the pizzas. So with ETH Dublin, actually, this was organized last night. I wasn't there, unfortunately, but I know that they have fun and they have pizza.
Awesome.
Paid with crypto.
Awesome. That's great. All right. We're going to wrap here, Alejandro.
Sure.
Lots of news that will be coming out over the next few days that will impact what we just talked about. So let's keep our eyes close to the screens for that.
Definitely.
Okay.
No, Pete, thank you very much. It has been fantastic to join you again, and let's hope that I can come back soon.
Absolutely. Thank you, Alejandro.
Bye-bye.
That does it for this week, folks, and you can learn more about the stories we covered in the show notes on our website, moneyneversleeps.ie. Thanks to Alejandro Gutierrez for all of the insights he shared in co-hosting this episode with me. If you like what you heard, please leave us a rating and a review on Apple Podcasts or Spotify, as it helps others to find the show. Also, thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm an early-stage startup investor focused on where fintech meets crypto and crypto meets Web3, and I lead the Techstars Web3 Accelerator. There are plenty of links in the show notes on moneyneversleeps.ie and how to get in touch, so don't hesitate to reach out. Finally, till next time, thanks for listening. See ya!
Money never sleeps.